Welcome, ladies and gentlemen, to Commodity TV. We are here today in Austria at Lake Wörthersee, and it's my honor and pleasure to really disturb Ronald Stöferle, the fund manager from Incrementum from Vaduz, in his vacation with his lovely family. But Ronnie said no, he's always taking time for us, and that's fantastic. We got to talk about precious metals, about his prognosis, and what's going on in the world. So, Ronnie, welcome, and thanks for taking the time.
Hi, Jochen, of course.
Yeah, there's a lot going on. We haven't seen us for a while, I must say, through Corona, of course. And you finished just your In Gold We Trust report, which is again a remarkable book with a lot of data and stuff. And I look forward now in my vacation to really read it. I will go through all 350 pages. Gold, what's going on?
Well, quite a lot, obviously. Yeah. I think the most important thing to say is that gold is in a well-established bull market. We should not forget that gold is rising in every currency. It made new all-time highs recently in basically every currency but the US dollar. From my point of view, we will make it's only a question of time that we'll make new all-time highs in US dollar terms as well. And this probably will kick off the next stage of the bull market. Then gold is rising against the equity market. Gold is outperforming bonds. Now at 1800, every dip is being bought. Yeah, so there's enormous strength. There's lots of capital on the sidelines. Mining equities do really well. Juniors do outperform the seniors. So there's only evidence and confirmation that this is just a healthy bull market and that we have to ride this bull market. And what should you do in a bull market? You should buy every correction. Yeah. And
you should be in it first.
Exactly, yeah, exactly. But lots of capital is on the sidelines. Yeah. I'm talking to lots of institutional investors, wealth managers, high net worth, and they all say, we want to get in, but we don't have the allocation that we want. So they keep buying, and I think making the case for gold now with the whole debt. Orgy, I would say. Yeah, I mean, it's pretty obvious that we won't see any reversal of the policies that we have seen for the last couple of years. So lower interest, more central bank interventionist policies, more debt, of course. And this should be the perfect foundation for the price of gold.
Yeah, definitely. I think I saw like a prognosis of $8,900. It's quite funny because I did a prognosis like 6 years ago with 8,400. So we are quite close, I would say. But 8,400 for this decade?
Yes. The title of the report is... we're talking about the golden decade, and that the golden decade is dawning. So it's really a long-term analysis of the gold market and all influencing factors. And we've got a model which is, I think it's the input factors really make sense, but it's not a super sophisticated model. But we have a look at monetary growth. We have a look at various numbers that used to work in the past. And we come up with a conclusion that at the end of this decade, the gold price would be at $4,800 US dollars. So this has got the highest probability. Now people say $4,800 by the end of the decade. That's outrageous, but it is a compound annual growth rate of 10.4%.
Yeah, so which is quite okay.
Yes. Yeah. And then we also say, okay, in a kind of worst case or best case scenario, gold might also end up at 8,900 US dollars at the end of the decade. And we compare it quite a lot to the 1970s, a stagflationary decade. And from my point of view, stagflation should be a scenario that investors should prepare themselves for.
Absolutely. How does the little brother look? Silver. I brought out last week a chart analysis about silver, and I said, well, it looks to me like that we are quite close coming to a breakout. And the real breakout is $23 for me. Then it's really safe. What is your view on that?
Well, we're publishing the In Gold We Trust report for 14 years now. And this year, for the very first time, we had a special chapter on silver. So from our point of view, I mean, it's no coincidence that we're focusing on silver this year. We think it's extremely attractive both from a fundamental point of view. I think the supply-demand picture looks really interesting. But we should not forget that over the course of the bull market in gold, at some point, investors will say, well, perhaps we want a bit more leverage, a bit more beta. And so you probably come to the solution that silver should be a good addition. We know that institutional or investors' demand in the silver market at the moment is extremely small. We know that the silver market itself, compared to gold, is very small. So therefore, I think if there's really even a little shift from investors saying, well, let's have a little allocation in the silver market, then I think it will have a tremendous impact on the price of silver. And now, we're trading around 19. I think from a technical point of view, it looks fantastic. And I know many investors that are still on the sideline. They don't trust this breakout yet. But I think that at some point, probably if we go above 20, then there will be much more interest kicking in.
A lot of people missed the boat so far. And so let's see what's going on there. Okay, silver market looks good, gold market looks good. So now the question is, what is about the macroeconomics? I mean, we are printing money like unbelievable, and it looks like that everything is super easy. Dow Jones is again going to the all-time high. Nasdaq had the all-time high. So what's your rating on that?
Well, I mean, it's demanding, but it's also interesting to follow markets these days. I think that, first of all, the measures that were taken by central bankers were much more aggressive and much quicker than in the 2008-2009 crisis. The second thing is, this time around, we don't only see monetary stimulus, we see massive fiscal stimulus. And from my point of view, we always said that fiscal stimulus will be the real driver regarding inflation. And what we're seeing now, I think this is really fascinating. And we're working on a piece about inflation that will be published in September probably. Because now we see that the broad monetary aggregates are rising. In 2008, 2009, you saw that central bankers basically tried to stabilize the money supply because credit demand was just collapsing. And now you see that broad monetary aggregates are rising. Now, why is it rising? Why do M2, M3 rise? The main reason is that
your daughters.
The main reason is that governments basically guarantee loans at enormous amounts. There was a survey in the Financial Times where some senior loan officers said, well, we hand out those loans. We know that they will probably be delinquent, but if the government basically guarantees it,
who cares?
Of course, yeah. I mean, if we don't make the deal, the next bank is going to do it. So I think this is really something that we should follow. That credit creation is going more and more from the banking side to the government, and then, of course, going forward, if this should kind of work, then governments around the world will say, okay, let's make huge guarantees for infrastructure projects, for a Green New Deal, for whatever. And I think this will really be the main trigger for inflation going forward. And we already see that inflation expectations, they rose much quicker, and they made a much quicker reversal than in 2008, 2009. And of course, the higher the debt level, the bigger the desire for more inflation and the higher the fear of deflation. So from our point of view, inflation will really be one of the biggest concerns for investors going forward. And in fact, we think that a stagflationary environment is the most realistic scenario.
Okay. So the precious metal fair in Munich is not taking place this year. You had like 10 or let's say 11 predictions even. And I think a lot of them really were fulfilled already this year.
Yeah, No. The calls were pretty accurate. We said that the US will enter recession. That worked out pretty well, and it's not because of Corona. Corona was only the catalyst for this recession. We already saw that the U.S. saw a big yield curve inversion, earnings recession. World growth rates were collapsing. So lots of signs that the economy is getting weaker and weaker. Then the second call was that the Federal Reserve will make a big U-turn and lower interest rates 3 times at least. We said that gold will make new all-time highs. We said that the HUY, the gold bucks index, will make 35% in 1 quarter. And then we also said, and I mean that's remains to be seen. We said that Donald Trump will not be re-elected. We said that Joe Biden is going to make it. I'm still pretty sure about this call. And if you have a look at the advisors of Joe Biden, and you can see it's basically the Bernie Sanders team.
Hardcore left wing.
Yeah. And this should
that's not good.
I mean, for the gold market, it should be positive.
But for the rest,
yeah. But it remains to be seen. But I'm still pretty much convinced that Biden is going to make it.
Okay, super. Then mining companies. This is also our core theme, I would say, at Commodity TV. I have the feeling that we really started a new bull market. Yeah, we are just at the beginning. A lot of good companies were risen now, or started to rise. Yeah, especially I think the small and mid-sized producers are really now becoming on the investor radar. What's your take on that?
Well, not only gold itself is really in a stealth bull market, also the mining companies are doing really well. We should not forget, compared to last year, gold is $400 higher. Costs are basically at the same level or even lower. Energy costs, of course, are a huge driver. Then we shouldn't forget that local currencies like Canadian dollar, Australian dollar, South African rand are pretty weak compared to the US dollar. So this is an additional factor that one should not forget. And then I would say that the bear market that we have seen, it was really brutal, and I mean this was the biggest and most dramatic bear market since the year 1940. So mining stocks were down 85%. So in the course of the bear market, of course, companies got their cost structure under control. They sold off or wrote off projects. They cleaned their balance sheets. So therefore, I think they're in an extremely healthy and comfortable situation at the moment. Now, we have seen that in the large caps like Barrick, Newmont, also Franco, there was really huge volume kicking in. So that's an indication that generalists are coming into the market. We're seeing that the Wall Street Journal just wrote that over the last couple of weeks, for the S&P 500, more companies cut or completely erased their dividend payments than in the last 10 years combined. While on the other hand, in the mining space, most companies are even raising their dividends. So I think there's indeed some great value plays in the market. We're seeing lots of activity on the M&A side, but most of the deals really make sense. We are seeing some financings where I would be a bit cautious, but that's
some explorer stuff. Jesus Christ!
That's just a sign of that the bull market is progressing. But in general, I think that the generalists are really waking up. They don't have any allocation in the mining space, so they are also buying every dip. So I think the mining sector is definitely one to follow. Perhaps we'll take a breather over the next couple of weeks, which would be healthy.
That's okay.
But the fundamental situation of companies is fantastic.
Super. Great, and the fundamental situation of your report is also outstanding, as always. Really, make sure that you have a copy, download it and read it. I will do that now on my vacation also. Ronnie, thank you very much.
Thank you,
all the best. Enjoy your vacation with your lovely family.
Thanks.
And hope to see you soon.
Absolutely.
Thank you. Yeah, ladies and gentlemen, that was Ronald Stöferle from Incrementum AG from Vaduz, and also the author or co-author with Mark Warlick together from In Gold We Trust report. And we disturbed him here at Lake Wörthersee Wörthersee in Austria, and you see, precious metals are hot. We are in the bull market. The things are really going well, and the generalists have rediscovered mining stocks. And that's really interesting because there might be a fortune to be made the next 5 years. So thanks for watching us. Check the report out, and bye-bye from Austria.